Hello guys, it's 9:30, so let's begin. So for those who are first timer to the Saturday webinar, right? It is unlike Friday webinar. Saturday webinar will be short and sweet. It will be very structured, straight to the point lah. Okay, so within like a 30-minute video, you can sort of get yourself covered for everything lah. But I'm also trying to make the Saturday webinar a little bit more structured in the sense that there's a proper flow lah, okay? So what I'm going to do from this week onwards is that for every Saturday webinar, I will start out with the portfolio first, the portfolio update, the position that we have taken, I have TP, cut loss, whatever lah, okay? Or any actions that we need to take on our existing position. I will go through this first. So we'll go through the portfolio. Then after that, I will go through some macro data related stuff. Maybe talk about the index a bit, if there's anything out of ordinary to talk about. And then I will end off with any new trade ideas, any new trade that we can take or we are going to take in the upcoming week now, okay? So without any delay, right, let's begin. Wait, did I record? Yeah, I did record. Okay, so let's begin. So let's go through the portfolio a bit. So you can see my portfolio kind of clean up a bit already. A lot of position have been removed because either cut loss or TP lah, okay? And you can see overall, the open position is in profit about 10K, 4.62% of portfolio. So if you have been with us, right, it is very hardly common to see the open position in profit because most of the time when things goes into profit, right, we will take the profit off the table and then what you have in the opening position is all the loss making now. Okay, so this is one of the rare times where our open position is doing very well. This is mainly because of Zim. Zim recently have gone up like very crazy. I'm sure you all know. Let's take a look at Zim. Okay, so now Zim, within the last week, you see 6 green candles in the row. So this 6 green candle alone is 41%, okay, 41% rally. So of course, if you are vested in this stock according to our option position, right, you will most likely see your position swing very, very big. Initially, it is probably in a loss. From loss, it becomes break even, and then it goes into a big profit. It should be in a big profit right now because the Zim right now is at 17.59. Our strike price for this trade was 15. So there is an intrinsic value of $2 plus. Okay. So depending on how much you bought your Zim at, I actually got it at 1.76. But it's actually a lot lower than 1.76 because we have a few we got one short leg that we already taken our profit on now. Okay, so now your Zim should be in a very good profit, but if you count it from all the way at the swing level here, right, or even the swing level here, you can see it is up about 90%, 90.99%. So now there is nowhere else, seriously, there is nowhere else that you can get 90% return from a particular position within such a short period of time lah. Okay, so you trade index with CFD leverage, whatever, still you are not gonna get this kind of return now. Okay, so even on an option position, right, if you risk about $1,000, you're actually getting back $1,000 plus. Your return should be like 1x or even 2x lah, depending on the kind of position that you have entered. Okay, so now let's go through all the position. TLT and Toll Brother, these are position that we recently entered. So TLT is basically a bullish position because we are looking at the yield going lower, right? US Treasury yield going lower, so we expect TLT to go up. Okay, so at the same time, we also have a Toll Brother short position. So now Toll Brother currently is forming like a bit of a double top here. There is still some buying power coming in here, but I do think that this resistance will be respected, mainly because recently there is builder first source whose earning came out. This is also a home builder. The earning came out and the earning was quite bad. The earning was quite bad that the stock actually dropped about 19%. Okay, so now the home builders are starting to show cracks in their earnings already. Okay, so for overly bloated home builder stocks like Toll Brother, right? I would expect similar stuff to happen during the earnings, which is on 21st of May. So now, Toll Brother earning 21st of May is the same as Zim, which is also on 21st of May, but Zim is pre-market lah, okay? So now, the reason why I am mentioning Toll Brother is a short position is mainly because this Toll Brother position and TLT position is actually the opposite of each other. They are hedging against each other lah, okay? TLT will go up if the yield go down, but Toll Brother will go down if the yield continue to go up. So if TLT is making money, right, the Toll Brother will most likely lose money. But if Toll Brother is making money, then TLT will most likely lose money. But the thing is that if you look at the risk reward profile of these two trades, right, the risk reward I believe is somewhere around 3.5x. Let me go and check. I think even for Toll Brother also around 3.5x. Let's see. Toll Brother. Okay, so for Toll Brother, if it hits our TP level at 105, not 100, even if it hit the TP level at 105, if you got this vertical structure, right, your potential risk reward is about 420 lah, okay, meaning to say 4.2 times. Then for TLT is about 450%. So we just be conservative lah. We say 4 times lah, okay, 4 times. So we need to say that if I lose 3,000 on TLT, I'm getting 12,000 from Toll. If I lose 3,000 on Toll, I'm getting 12,000 from TLT, meaning regardless of what happened in the market, I'm gonna get 8,000 net profit nonetheless from either one of the trade lah, okay? So this is the essence, this is the foundation of a long short portfolio structure. We need to find two trades that we can couple up together. So now on top of that, right, we actually have BXMT also. So now BXMT is a Blackstone Mortgage Trust lah, okay? So if you are holding Blackstone Mortgage Trust, if you are a stock position holder, right, you are very, very near the profit target lah, okay? You should be in quite a big profit already, but for the option holder, the profit is still not that great yet. We need it to go down all the way to 16, 16 like that. If it go down to 16, then the profit will be quite good. But of course, even if it goes to like $17, we should see substantial profit. But right now, at the current price of 17.86, right, the profit is still like not that great. You can see for BXMT, my profit is only around like 1,800, whereas Zim is around 8,700 already. Okay. So now BXMT is a real estate, it's a REITs. So it is a similar boat as Toll. Okay. So these two are actually kind of a little bit overlapping, mainly because if the interest rate were to remain high, right, this two trade is actually gonna crash. Okay. Which means to say that these two trade are somewhat similar to one another, and we have a TLT that is on the other side of the trade, okay? And we are actually fine with this mainly because we have other bullish position like SEMR. SEMR is also one of those tech companies where it benefit from low interest rate, meaning to say that SEMR and TLT, they are coupled with Toll and BXMT, okay? And then of course we have other stuff there also. Now Zim, right? It is in a big profit right now, and I would say that we are most likely gonna take profit on Zim before the earning. Okay, we are gonna take profit on Zim before the earning. So once again, earning is on 21st May. So 21st May is still very far, okay? It's next Tuesday. And it is before market, but the moment we see some red candle come out, right, I think we are good to zao already because the profit is really a lot. So what we do not want, right, we do not want to be like too greedy already, because this is already a very big profit. We do not want to be too greedy and then we hold until the earning and then earning crash like 20%, then all the profit gone already. So we don't want that kind of situation, okay? So even though most of the time we will want to hold through the earnings, right, but because Zim has already rallied close to 100% before earnings, it is much safer for us to put the cash in our pocket rather than risking it. So now, if you still want to remain invested in Zim, what you can do is you cash out, and then after you cash out already, you play another position. That's better. In this case, right, for example, I can cash out this 8,700. Then within this 8,700, I can put in another $3,000 in Zim. So even if the new trade, I lose everything, right, I still have 5,700 cash in my pocket. So these are the kind of things that you have to think about. You need to ensure that you know what you are doing now, okay? So there's nothing here is like follow step 1, step 2, step 3 like that. If you have that kind of attitude towards trading, you will never be profitable. You have to always look at things on a case-by-case basis. Okay. So now another thing that I want to talk about Zim is that even though we are $8,700 in profit, right? Actually, our profit is even higher, mainly because a few months back, we taken the profit on the short leg. Okay, we have taken the profit on the short leg, which is about 3,200. That was all the way back in March. Okay, we got $3,250 from the short leg, which means to say that if I were to TP right now, my total profit on Zim is actually close to $12,000. So that is actually a big amount now. Okay, I believe I risked about $4,000 on the trade. So I'm getting about 3x from this trade alone. And in fact, we were very patient to wait until like this ready because I do remember our position was somewhere here, and then we actually held through the crash, and then after that we hold until this whole thing recover. Okay, so that's for Zim. And then AMR, okay, AMR also doing very well. The momentum to the downside is still going. So now for the option holders, right, I am actually holding short position now. Okay, you can see I'm holding short position, mainly because the option position is my volume too much. There isn't sufficient volume in the option market, and at the same time, right, the spread of the trade is too wide already, so I am not able to play it with my level of capital. Okay, so but nonetheless, right, if you have option position, you are still safe. Your strike price is at $280, but because it is gonna expire sometime, I believe in June, right? It's June expiration for those who are taking the option trade, which is here. June, yeah, it's a June. So if you are already in profit, right, considering that you have already taken the April premium, right, already taken the April premium, then now the June is like in good profit already, I will consider that you actually TP your trade. Okay, you TP your trade. Don't wait until June, because right now your options still have a lot of time value, because you still have about 1 month worth of time value. But if you continue to hold this, and then if AMR goes sideways like this pattern, right, for like 1 month, right, then your time decay will start to accelerate during the month of June. And then that is where you will start to lose all your money. Okay, so what I can recommend for option holder, you TP now, and then you can consider playing a stock short position. Okay, so for those who are still holding the stock short position, you can continue to hold, because we are not affected by time decay, we are not affected by anything. We can just simply continue to hold on to this trade. Okay, so that's for AMR. Okay, so basically I cover everything already. SCMR currently doing quite well. Also, you can see a rally substantially during the earnings also. Okay, so now, yes, we lost money on Disney, but the thing is that your portfolio should be about 6 to 7 position, 8 position, long short, well diversified, beta hedge. So the profit from Newmont, the profit from Zim, the profit from Semrush, all these not only cover Disney loss, but it more than make up for it. Okay, so if you lost your entire portfolio on Disney and then you don't have all the other trade, then you are doing something wrong. That is not what we do. We don't look at one company and then we YOLO our entire portfolio into that one company, and wow, your analysis not good, and then the Disney crash, then don't know what. We never ever do that kind of thing. Okay, so if all your profit from Zim, AMR, Semrush, Newmont, if they are not able to cover your Disney loss, right, there's something seriously wrong with your lot sizing. Okay, you may want to look into your lot sizing strategy a bit. BT, I just explained exactly just now. I explained with the knowledge that you guys are holding 280 strike. So as what I said just now, right? You should TP. Because if you hold, the time decay will start to kicks in already. Because your option is not even your option is not in even in the money yet. Your option is still out of the money. So while there is still time value left, right, it's good to TP. So but okay, you may want to check because AMR option is very, very illiquid. So what you may see on your Tiger, the last dump position may not be the actual price lah. Okay, so you may want to go and check what is the current price right now. So don't count on the last dump position. Go and actually check what's the current price right now. Okay, so now let's continue with the rest. So the other stuff are practically it has been there for like donkey years now. Okay, so Lumen Technology, Elogen, these are short squeeze trades, so they are going to be there until the short squeeze happen. And then for on holding, right, I'm still holding the on holding position, but I have added another covered call at 37.75. So now the covered call is like making some money because recently on holding went down a lot. But there seems to be a bit of buying power coming here, so I do hope that it can recover lah. Okay, because the earning is going to be out soon, 14th of May, which is like next Tuesday like that. So yeah, I mean I'm definitely going to hold through the position through my earning, through this earning lah. Okay, so let's see what I can do from here. Okay, and then aside from that, nothing much really. Lumen Elogen, I'm not gonna cover lah. Okay, we are gonna sort of hold until the whole thing shoot up lah. So this is Lumen, retrace a bit, but recently managed to find support here. And then for Elogen also went all the way down from here. I think 5.5 all the way until 2.7 is quite a big drop lah. Okay, but I mean we are waiting for the short squeeze lah. So in fact the risk on this trade is not, the risk on both of these trades is not really a lot. So I don't really mind holding this until even if it goes to zero lah. Okay, so if you are facing a very different kind of situation, right, the very first thing you want to check is your lot sizing strategy lah. Okay, so and the lot sizing strategy is very simple. For every trade that I'm taking, right, I'm taking the same risk. I'm risking $3,000 or $4,000 around, like for most trade lah. Okay, so if I'm risking that same amount, then as long as my risk reward ratio is like 3 times 4 times, right, most of the time I'm gonna make money lah. Okay, so now the issue comes in when if you have a very, very small account, then you want to play certain option, but the option the minimum one contract, you are already risking like 5-6% of your portfolio, right? Then of course you definitely can't play those trade lah, especially things like AMR option is actually quite expensive. And because it's very expensive, even one contract for your account, right, it may be considered very, very big risk. But because you want the trade, you chung into it, then you may actually suffer very big lah. Okay, so this is the reason why you cannot, it's very hard for you to be successful with like 5K account, 10K account. Very, very hard one. If you want to trade comfortably, right, you at least need like 30K, 40K, or even 50K account, or minimum 30K lah. That's what I would recommend lah. Okay, so now we've gone through the portfolio already. And one thing I want to highlight within my trade also, my Disney actually lost a lot of money. Okay, mainly because we exited the short leg earlier. But then after that Disney crashed. So this decision came down to one simple thing. It is greed lah. Okay, it's greed, because we think that Disney will chung up, Disney will gap up. So because of that, we took the profit on the short leg, but eventually when the earning come out, the Disney crashed, and then we eat a very big loss on the long leg. So you can see here my loss on Disney is about $8,000, which is a lot bigger than what I will usually risk. I usually risk around 3,000, 4,000. So I actually lost twice the amount that I usually take on Disney lah. Okay, of course, I mean it does happen once in a while, but you can see that for this entire year, right, this is the first time this kind of situation happened now. Okay, so sometimes I would not say that this is a mistake. It is just the result of taking a greedy decision, and then we are facing the consequence of a greedy decision now. Okay, so let's say if I were to hold the short leg through the earnings, right, then I'm going to, like, let's say everything decay down to zero. You can see that I will get 9K on the short leg, but I will lose 14K on the long leg. So the loss is about $5,000 only, okay? But instead right now I lost like $8,000. So yes, I mean this is not optimal, but I will say that this is a conscious decision. It is not like I don't know what's going on or I made a mistake, but rather this is actually a conscious decision that I made based on greed, and then it just didn't turn out in my way lah. But of course, thankfully, NEM profit was big enough to sort of cover up, but not only cover up, but it even make more money than Disney lost. So I'm quite okay with that lah. So this is why sometimes your portfolio management, your decision making skill is very, very important. Okay, so now let's go through a bit of macro stuff. Okay, so you can see now recently, right, overall the economy data is not really that strong, but then again the market is kind of rewarding all this weak economic data, because a weak data meaning Federal Reserve gonna cut rate, blah blah blah, all this kind of stuff lah. Okay, but there's a underlying threat to all this as well, because eventually, right, weak data means that eventually market is going to collapse, the earnings are going to collapse, and the fact that we are seeing some of the home builder stock actually losing money is a bad thing. And we are seeing stocks like Starbucks, these are very consumer centric stocks like Starbucks, Lululemon not doing that great, right? It's actually quite scary because of the fact that it kind of shows consumer spending is not that strong already lah. So eventually all these may start to sort of spill over into bigger companies like Microsoft lah, AMD lah, Apple lah, then we may see a substantial market crash lah. Okay, so now weak data is good until it is not good lah. Okay, so now let's look at some of the weak data that we saw recently. So the most recent one is the consumer sentiment. Okay, so now in our group, in our community, we don't really look at consumer sentiment that often, but for those who came for the course, right, for those who came to my 3-month course, or if you are in our one-to-one program, right, consumer sentiment, the Michigan consumer sentiment is something very, very important, and we actually look at it quite closely. And the most recent data that we saw, which is the May 10, yesterday one, right, it actually crashed by quite a bit. Okay, it actually crashed by quite a bit, but still it is kind of like a higher low. But if it start to go below this low, right, 61.3, if it start to go below 61.3, right, then we are kind of looking at probably a potential breakdown in the market lah. Okay, so now on top of the Michigan consumer sentiment, right, we are also looking at inflation expectation actually going up. For example, the 5-year inflation expectation is 3.1, even though the forecast is 3.0. And the current inflation expectation, meaning in the next 12 months, is actually 3.5 when the consensus is 3.2. So it seems that the inflation battle is still ongoing, and it seems like the expectation is not that great also. So on top of which, right, we also see United States unemployment rate going back up to 3.9%. So it has been hovering around 3.9, 4.0. It haven't go up to 4.0 yet, but I think eventually it will. And if it start to go into 4.1, 4.2, right, that is when things are going to get a little bit danger lah. Okay, so you can see for the entire of 2022, 2023, we are somewhat at 3.8, 3.6, 3.5. But right now, this year is the first time that we actually start to hit 3.9 already lah. Last year, we hit 3.8 at the high, but now we are going to 3.9. So it's slowly ticking up, okay? And then after that, all hell will break loose, and then things will spike up. But the thing here is that you cannot wait for this. You cannot wait for this. By the time you wait for this, right, the market crash already. You are too late, okay? So this is not a leading data. This is actually a lagging data, but it is also more like a confirmation data for us, okay? So now if you look at the April 2020, where the big spike happened, right? If you wait for this data, April 2020 data only come out in May. So if May you saw this data for April 2020, right, market already crashed, okay? Market already here. Market already here already. Like market already recover already. It crashed in March like that, okay? So there's no point looking at unemployment data for trade ideas or for timing purpose. Okay, unemployment data is not for timing purpose, but rather to sort of see the overall economic health. So on top of the unemployment data, right, we do have a few stuff ongoing on the service sector also. So now both the manufacturing sectors and service sector are in contraction. You can see the manufacturing sector below 50, which is considered a contraction. And then at the same time, we also have the service sector already also below 50. So both manufacturing and service in the US is facing contraction. Okay, but what is a little bit more alarming to me is that for the service sector, right, as I mentioned on Friday, 80% of US business is coming from service sector. In fact, service sector is the bedrock of your employment. Okay, a lot of employment happen in the service sector. But recently, when I was looking at this data in detail, right, the business activity is actually it declined by quite a significant amount. In March, right, it was 57.4, but in April, it's like 50.9. So there is a very big decline. And not only that, right, there is also a decline in unemployment. So employment in the service sector is actually contracting already. So now, if the service sector stop employing people or they are cutting down on manpower, all this kind of stuff, right, that is where you will probably start to see the unemployment rate ticking up. Okay, so now the PMI, ISM PMI is a leading indicator. Okay, so this will actually tell you maybe 2-3 months down the road, unemployment rate is going to tick up. So you can actually use this for timing purpose, but you cannot use this for timing purpose because by then stock market move already lah. Okay, so now with all these stuff combined, right, the US economy is not really looking that great. So it also can be that maybe it can ding dong here a bit and then everything might start to crash. I mean, I don't know. It's a bit hard to tell, okay? But what is confirmed for sure is that you cannot have a very, very aggressive long portfolio. There must be some kind of shorts, and you can see I'm already loading up some shorts that can benefit from a very, very big market crash. Okay, so this is overall what I want to say. So now the US 10-year yield also on Friday, it recovered a bit. But with all these stuff ongoing, right, one thing that I am truly bullish on is actually gold. Okay, so now gold last week recovered a bit. Thursday, Friday went up a bit, but maybe it can go down. It may even retrace to like 2002. But in the long run, right, maybe in the next 6 months, next 1 year, right, I think gold can eventually go up to 2005 or even 2006 like that. So I'm very, very bullish. And in fact, I'm looking for some kind of long-term position on gold. Okay, so maybe we may not play gold miners, but we may play the actual gold itself, GLD, the gold ETF, GLD lah. Okay, GLD. So we may actually play GLD itself. So we shall see how. I'm not that expert with long-term option structure, but I will try to work out something so that we can have a long-term option structure. Okay, something that we can hold for like the next 6 months without taking up a lot of risk also. Royal Gold, not the toy. Royal Gold is I mean it is shit. RGLD. Okay. Royal Gold also quite bullish lah. So Royal Gold is not a mining stock, but Royal Gold is actually they earn money from selling royalty lah. They call gold royalty. The business structure a little bit different. But I mean, if gold is going up, right? Highly likely counters like Royal Gold or even Goldfield. Last time we played Goldfield before. All these stock definitely will go up. Even Newmont will also go up lah. Okay, but the thing is that because stocks, right? Stocks are tied to the economy. So maybe when the economy crash, right, then maybe all these companies, they even with very high gold prices, they might not be able to like pay their workers lah or all kind of stuff happening lah. So if we are looking from the perspective of the economy crashing and people rushing into gold, right, I will definitely feel a lot safer buying the actual gold itself rather than the gold stocks. Okay, but let me look more into it to see what kind of the best possible trade that we can take for gold. Okay, so now with all this covered, right, let's go through some of the potential stock that we can trade in the future. So yes, we have taken profit on Newmont already, but it seems like a very bearish candle coming in. But we see next week how lah. Okay, eventually if it is able to find some form of support, the momentum go up again, we can enter Newmont again. So I do believe that Newmont with the current gold prices, it can probably go a lot higher also lah before the market crash lah. Okay, but we shall see how we can enter this lah. Okay, so don't be too salty about Newmont because it closed at 42.49, 1 cent below our strike price. Like what the hell? Like just exactly like purposely taunting us like that. But still, right? I mean, we got profit lah. Okay, and it is actually quite a substantial profit for most of you. Some of you got 3 times or 3.5 times. Some of you unfortunately got 2.8 times, depending on the kind of option prices that you get lah. Okay, I personally got about 3 times like that lah. Okay, so now Newmont, we got the money ready, so let's not cry about it, but rather let's see how we can re-enter this in the future also. So as I mentioned, Zim, right? Most likely we will TP before the earnings lah. Okay, but maybe the moment we see one red candle, I think I will sell already lah because it's already a lot of profit here. So some stuff that I may consider entering in the future is I mentioned McDonald on Facebook before. So McDonald is something that I'm looking to enter, mainly because it is a very safe defensive stocks lah. Okay, it's a very safe defensive stock. So if like the market start to crash, or you don't know market may crash or not, but you still want some kind of like long position in case market still rally, you still have a bit of skin in the upside, right? Actually, McDonald is good lah. Okay, so we want to avoid those kind of very, very high growth, high beta stock like Palantir, or maybe even on holding. We want to avoid this kind of stocks really, because if let's say market really crash, these are the ones that are gonna drop like a rock lah. Okay, whereas McDonald can still maintain most of the value lah. So McDonald long position, something that I'm considering. Because recently we have the earning, but a lot of support came in during the earning, and then recently it's going back up by quite a bit also. So I think there's some, from a technical wise, there's some buying coming in lah. Okay, but of course, the reason why we chose McDonald in the first place is not because of technical, but rather the fundamental and how it fits into the macro landscape that we are seeing right now lah. Okay, so McDonald potential long position. And the other one is Adobe. So Adobe is a potential short position. Okay, so it is one of those AI stock that don't really benefit from AI, but the stock still rally nonetheless. I think Adobe is quite a shitty stock lah. Okay, I don't really like it, and it in fact rally quite substantially here, like for no reason also. So I'm not really sure what's going on here. I think the earnings recently does not justify this rally. It seriously doesn't benefit from any of the AI stuff. Perhaps maybe Photoshop might, but I mean majority of their product don't really benefit from AI lah. Okay, so it does seems like the momentum is going back down again, so we can actually play a short position or a put option structure on Adobe. Okay, so this is something maybe I will enter next week. Maybe I will enter both Adobe and McDonald next week, a long short pair together. I think just nice. And another sector that I'm looking at is actually the transportation sector. So we covered this briefly during the yesterday webinar. Also, we are looking at a lot of the transportation sector, and it does seems like the earnings here is very cui earning now. Okay, I think they are also starting to go into loss making already. So you can actually see here, they start the net income gone negative already. So it is quite not really a rosy picture for the trucking sector. Okay, is this a trucking company? But I mean, it's a transportation company lah. Okay, it's a logistic company that provide end-to-end supply chain with a focus, blah blah blah. Okay, so now from a technical perspective, also it broke through this support, so maybe it can like sort of do a rebound a bit, but after that we will definitely short this also lah. Okay, so this is one of those recession shock lah. Okay, if market breakdown, these are the stuff that are gonna fall very very big. Things like the transportation sector, real estate sector, tech sector, these are stuff that's gonna fall, but things like McDonald, most likely they will maintain now. Okay, so now of course the next one, I believe I have mentioned this before quite a few webinar back. MSOS is a cannabis ETF. So now Okay, to be honest, I don't really like know very well about these sectors, but from reliable sources, I've been told that in US, right, majority of the state, they are looking into legalizing weed, okay? In fact, for the past 6 months, right, the number of states that is getting weed legalized for recreational use has been increasing. So, and also considering the fact that this ETF, the entire cannabis um sector have really crashed until like what we will call value level, okay, value level. So what I would think is that, I mean, right now, since it is of very good value and at the same time we have a bit of catalyst coming in, but because this is an ETF, there's no earnings, nothing lah, okay? So it's mainly reliant on the US legislation or the politics stuff going on there regarding cannabis lah, okay? So because of that, we can't really sort of play a short term on this. We probably need to play like a long term, maybe going into even 2025 like that. But I do think there is some upside to this lah, okay? Some upside maybe towards $15 or even $16 like that. So this is the more of a speculative long side lah, okay? So now on the other end, similar to McDonald, right? I also think Pfizer is actually a good safe long position to have in times of potential market crashes. So it is not to say that we are totally not playing long position. We will have long position. We will have Pfizer, we will have McDonald, and even we may consider a few growth stock also lah, one or two growth stock, but we are not gonna hold a lot of growth stock like we used to lah, okay? So these are some of the stuff on my radar. I may not take all of them. I may take some of them, but pay attention to the Patreon and the Discord update, okay, whenever this trade went out. So the most, I would say, possible trade that I may take in the coming week is probably McDonald and Adobe lah, okay? So these are the two stocks that to watch out for. So right now, McDonald and Adobe are not very cheap. McDonald is $275, Adobe is $482. So once again, because these are very expensive stock, right? The option will be very expensive also. So if you have a small account like 10K account, option trade is probably out of your league already. So you may just want to play a stock position instead, because if you have a 10K account, right, there is no way for you to standardize your risk, because even the minimum contract, your risk is blown already. So these are the kind of things that trader end up doing. They have small account, they play that one contract, but some of the one contract they are risking $500-600. Some of the other contract they are risking $300-400, and then the one that they risk a lot lose money, then the one that they risk little gain profit, but the profit not enough to cover. Those kind of lot sizing situation, okay? So that's why lot sizing is very, very important. Don't suka anyhow, like think trading simple like that. Trading is never simple at all. You cannot be profitable with 10 minute a day, 15 minute a day kind of analysis, okay? It's so hard to get into companies like Morgan Stanley, JP Morgan, where a lot of traders earning big money and they spend their entire life trying to get into those companies. So there's no way you can be that kind of success level with like a half-ass kind of effort, okay? So that's the reality of it. So make sure that you are not just blindly copying, but make sure you are also working out on your own end on what are the lot sizing, that your risk management, everything, okay? Definitely you can see from my portfolio, my capital, and then the lot sizing that I'm taking, you can agak work backwards, but what you will realize is that if you have a small account, right, most likely even one contract, your risk is already out, okay? So pay very attention, very good attention to that, because I have a lot of people PM me like, hey Zon, how come your Newmont earn so much, can cover Disney loss, but my Disney loss is so big? And the reason is very simple. Very simple. Because Disney is $105 stock. The option is very expensive. You buy one contract of Disney, you buy one contract of Newmont, which is only $42. Newmont option is like what? How much is Newmont option? Let's check. Okay, let's check. Newmont option is only like 65 cents. Disney option is like $1.57. So if your account is small, you buy one contract, then your Newmont profit definitely not gonna cover your Disney profit at all, because your risk is different already. Even if you 5x your Newmont, but you 1x your this, right? You're still going to lose money on this. So these are the kind of thing that like people make this kind of mistake and then they think they are not making mistake, but something wrong with the trade call or some other stuff happening. So it's really important that you truly understand what you are doing and not suka lah. Okay, so now that's all I have for you today. So all the best next week. I will be around. I'll be like working 24/7 on stock related stuff really lah. Okay, so I'll be around. I'll be posting some additional trade. So just look out for it lah. Okay, guys, have a good night. Thank you very much and have a great weekend. Hopefully the Zim continue to rally, or even if it doesn't rally, we can cash out lah. And my next cross finger, my next hope is that Toll Brother will crash on earning lah. Okay, that's my next big hope, and hopefully SEMrush also continue to rally. Thank you very much. Bye bye. Have a good night.